Hello, everybody. So, you probably want to know how to make some quick money here and there using the market on a very short period of time, but you just don't know when to buy and when to sell. I'm going to show you a little strategy I use, no financial advice, but a little strategy I use to trigger buy orders and sell orders when I'm trading. Okay? So, here's the chart what I use when I'm trading. I use a 45-minute chart. Okay? It means that each one of these candles represent a 45 minute of price action. All right, within that 45 minute, that's what it is. And if it's red, the bears have dominated, the sellers have dominated. If it's green, the buyers or the bulls have dominated. All right, so you already learning a little bit about bears and bulls, right? The bulls are all the buyers, the ones that are bullish, positive. The bears are those that are selling, they're shorting, right? They're not longing, right? Okay, so understanding that, what are you gonna need to be able to do this? And this concept is called scalping. It's taking advantage of short fluctuations in the market, the volatility in the market, to generate sell and buy orders and generate quick profits. It's not a lot of profits, it's little and quick profit throughout the price action that's happening throughout the day. Okay, so what are we going to be needing? We're going to be needing the 10 EMA, exponential moving average. That's one of the things we're going to be needing. The other thing that we're going to be needing is also the 20 moving average. All right, what else are we going to need? We're going to be needing the stochastic, and if possible also the relative the strength index, the RSI. You don't need both of them. In my opinion, I can use the stochastic. They both show momentum and strength. They show the strength of the price action. Okay, so what are we gonna do? So we have those three elements: the 10 EMA, the 20 EMA, and the stochastic. The other thing that we're gonna be needing, and it's mostly for guidance in general, is the volume. Volume is right here, and it's all of these different bars. Okay, so let's start with when to sell. Okay, when to sell. Let's say you have a position right now, you bought here, and you see the price going up, going up, going up. You have no idea when to sell. You have no idea when to sell. Rule number one for when to sell, in my opinion, no financial advice, is wait until the 10 EMA is crossing below the 20 EMA. This, it's a no. It looks like a fake out. Then cross. Okay? So you wait here, wait here, wait here. When you see that the 10 EMA has confirmed a cross below the 20 EMA, that's a check. All right? And I'm copying a little bit of what, not copying, but emulating a little bit of the concept that Steve does. A lot of people do different concepts like this, but I use different tools, different techniques. Okay? So that's the first check. We're going to be needing 2 checks. All right? Most people use 3. 2 checks is all I need to when to buy and when to sell for quick scalping. So this is the first check for selling. The second check is that you're gonna look at the stochastic, and if the stochastic is about to cross or has already crossed below 80, you're going to have the second check, and that's when you sell. Not when it looks like it's going to go below 80, is when he has confirmed it. And they have to happen exactly at the same time. So you see here, that didn't quite cross in here, so you would have not sold there. You would have sold, that would have been a big mistake, right? So it didn't quite cross there. So when they cross exactly at the same time, when this one crosses, when the 10 moving average crosses the 20, and when the stochastic crosses below the 80 level, that's when you sell. Okay? And if you would have sold there right now, right now, you would have made profit from when you bought. Okay? Let's say you bought here, that's just an example, and you would have made profit relatively quickly. Okay? So now, when do you buy again? Okay, when do you buy again? So there's also 2 rules, all right? 2 rules. In general, 2 rules on when to buy. All right? So you're going to wait for the 10 moving average to be about to cross, like it's crossing the 20 moving average. when you see that the 10 moving average, the orange line right here, is crossing the blue line up, that's when you will buy. But hey, you need 2 yes. So let's say an example. Let's look for an example real quick. Probably we might have one here because this happens throughout every day, almost throughout the day. All right. So here you go. We have a perfect one right here. I don't even have to like make these videos for this purpose. Like I don't have to fake it, right? So we see the 10 moving average has already crossed the 20. So that will be a sell, right? And this right here crossed it all the way down. So you see that? Crossed it all the way down. So that would be a sell. So when do you buy? Well, when the 10 moving average begins to cross the 20 on the positive side and the stochastic is crossing on the positive side, that's a buy order right there. Okay, that's a buy signal. Buy. All right, and you would have not sold until when? Well, until you see that the stochastic is going down exactly when the moving averages are moving. Okay, so it's almost there. That would have been probably a good idea. Now, one thing you would say, well, Darwin, I didn't make all the money I could have made. I could have made more money if I waited. In my opinion, this is when then you have to use other things too, like support and resistance. But I'm just giving you a quick, simple one, right? I'm just telling you buy signals that get triggered when the moving averages cross and the stochastic crosses either the 20 or the 80, depending on the case, okay? So I'm making it very simple and easy. And it's not about making huge winners. It's about consistently winning, consistently winning, consistently winning. If you win 8 out of 10, 7 out of 10, that's great. I have an example. Baseball players, right? So, or any player. It's not even about them being 100 of 100 every time they hit the ball, right? It's about the consistency by which they hit the ball. They could strike 2 times, almost in every game and hit it 5 times, and their average still going to be very high, all right? And it doesn't have to be 100%. Nobody has that 100% perfect, right? It's about consistently winning. So this is just a quick strategy for you to create a sell signal and a buy signal that tends to work, that a lot of people use, and I hope this is very informative and very helpful to you. Try it out and let me know how you make out paper trading. Paper trading, not here trying to tell you when to buy and when to sell. Just really teaching you strategies for how to understand when to sell and when to buy. In my opinion, okay? No financial advice. Thank you so much, and I hope you like this. Subscribe to the channel, give it a like, and I'll tell you more confirmation as to when to buy and when to sell using more yes and no indicators from what's happening on the charts. Thank you. Bye-bye.